Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, January 19th, 2017. Market's closing right about now. But anyway, we saw some weakness today. We, we saw a little bit, it broke through the reaction line, and that was then calling for a move to come someplace down into the 2256 in that area there. So it made it close to it, but nothing really that crazy. But the important part is that they broke through this trend line here, and we made a lower low before we made a higher high. So things are starting to roll over here. Can we pop back up? Absolutely. We don't really have any bullish divergences on the 15-minute here. We pretty close. We hit it equal here. But the thing is that we have the inauguration tomorrow. We have to kind of wait and see. But the important part is that you really don't want to be jumping on the long side at this point in time. You want to. I'm hoping for a bounce to short, and if it breaks down, then I'll wait for a bounce into resistance and short it then. But I'm not too interested in looking long right now. So lucky if they can push us back up to the 2272. If they get up here and get through it, then we're back to our normal reaction lines on the upside, which is 2278 and then the 2282. Now, if the bears push it through this 2258, then I believe it's going to finish the reaction trade down to the 2253, and if that breaks, then it opens up the door for these gaps to be taken out. So 60-minute chart, you can see that they burned off the extreme overbought conditions, but these bearish divergences are warning that there's a larger move coming to the downside. And I have the label with the 1, 2, 3, 4, and then 5 here. And even if they have to head higher and make a new high, it's still not something you don't want to buy, because the next move is coming lower, and there's a very good chance, because we made a higher high, that this wave 5 is in. So I'm sticking with the. I think it's really, really dangerous to be looking on the long side, but here's a reason why we may, where we could see a bounce. And this is you could see we made it through this moving average here, but then popped right back above it. So there was no kind of panic at all, because we closed back right on it. So once it starts closing below this, that will be the first sign, because this will be the first time that we would see a close below the 60-minute 200-day moving average since this rally started in November. So where you can see that they're testing this panic line. They tested it once, twice, and now they came down and actually broke through it a little bit today. So, a test, came down, almost tested it, broke it, but then came back up. So this is the weakness that we're seeing in this market, and why I'm saying, the long side is dangerous. So if they pop it up, we want to keep an eye on the 2070, 2072. I may start layering in a short. If they start breaking down, wait for the bounce, and then we'll short that. But until, we start seeing real complete breakdowns, it's just get ready to short, and it should be a nice trade setting up. So with that, have a great night, and I'll talk to you guys tomorrow.